Good morning, everyone. How are you this fine morning? So it is Friday morning, July 19th, and I thought what we might do today is take a look at some biotech names. These are some companies that have been hit pretty hard in the last couple years, and they are trading down near cash value. Now, that does not mean that the stock prices are going to rise because, as you know, what matters is what institutional money is doing. Are they buying these companies? Are they selling these companies? Are these companies in play at all? As always, I haven't looked at anything. I don't know the answers to those questions yet. I'm going to find out with you right now. And if we find some good news, great. One thing I do know is that funding that has flowed into the biotech industry, as far as startups go, is that was the peak industry for the first quarter of this year. So a ton of money flowing into biotech. So I would guess that some of these names are being accumulated, but I don't know. So I thought this would be good to look at. So let's take a look at some biotech. Also, for those of you out there, I am taking on 5 new one-on-one students over the next week. 5, that's it. It's up until next Friday. If I get one, I get one. If 10 try to come on, but I've already filled with the 5, then 5 is what it is. I don't take on more than 5 students at a time. It takes a lot of time and effort to help someone achieve the knowledge base to be able to do this stuff and to be able to follow along with me in the weekly updates. So 5 new one-on-one students. If that does in fact interest you, please reach out to me via my email address, which is Derek or D Miller at PrometheanInvesting.com. Here I am on Twitter. You can DM me here. I have my LinkedIn page, which is linkedin.com/in/honest-trader. Shoot me an email if you're interested. Look me up on LinkedIn if you would like to. You can reach me there, and you can also just simply give me a call, 805-807-1129. I am not shy about putting my number out there. It doesn't bother me one bit. All right, let's get into it, and let me put the proper ticker back up here. There we go. Because I'm going to pull these down here shortly so that you have the ability to see the chart a little bit better. But what we're looking at: biotech companies, CRISPR, DNA, NTLA, Beam, TWST, VERV, Prime, Edit, CRBU, Sana, Arco, and that's XBI is just a biotech ETF that we looked at the other day. So I don't know if I will or will not get to that. But let's jump in and take a look. I'm going to go ahead and drop that, and I'm going to share my screen with you. So let's run through some of this stuff. So we'll look at CRISPR and DNA first. Okay, so let's pull it up. We always go to a monthly chart. Everyone knows that. What we're looking for here, folks, is we already know. Oh gosh, look at that NASDAQ. That is not looking good, is it? Let's go and take a look here. CRISPR. All right. So we know we're not going to see a lot on a monthly basis because, when you're only looking back 8 years, that's just not much. In fact, this one, I think is only 7 years. I think it's 2017. No, it is 16. Whatever. Let's zoom in a little bit on CRISPR and see what we see here. Is this a lot of people, they're always looking, hey, what's the cheap stock? What's the cheap stock? In a market like this, I don't know that is exactly really what you want to be doing. But I do think we're going to find some interesting names here. So I think it's worth the look. Let's see. Anything here? See this, they're just really, yeah. This isn't going to shape up into anything, guys. Let's not even take a look. Let's cruise on over to DNA now. I'm going to zoom out on a monthly because this actually is looking fairly decent. But look how cheap it is, right? I mean, that's, gosh. Yeah. My goodness. Yeah, I mean, I love big volume, but when you're looking at a stock like this, I mean, obviously nobody owns this penny stock on an institutional level or otherwise. I mean, what is, on a daily chart, what's 60 million shares of a 30 cent stock, or even a 60-cent stock? It's $15 million, guys. It's nothing. It's certainly not enough for us to care about or evaluate. So we have NTLA and Beam. NTLA. Okay, let's go out on a monthly. There's something interesting there. I will tell you, we're going to come back to that. NTLA monthly. With that big spike in the background, and you're going to see a lot of that. AI is going to look a lot like that soon enough. It really throws the chart off daily. So you're going to have to zoom in to really kind of pay attention. Where's the volume taking place? Well, that's at a high price. That's at a low price. That's at a high price. That's at a low price. Yeah, there's not even enough really. I mean, let's take a look. If for some of you guys that like to play it super short, let's see if there's anything here on a super short basis we can point to. There really isn't. I will say this chart likes to fill gaps, and you do have a gap down here from 23 to 2350, 2370, whatever that is. I would say that gap is going to fill if that interests anybody. But that's not something I'm not going to encourage. I'm not going to encourage those kind of moves on something that on a long-term basis is. I mean, this isn't really in play. That it just isn't. Let's go back to Beam. I may have picked a poor subject today, guys. I just thought when I saw that a bunch of these were near cash value, and that could be due to investment, right? But when I saw that a bunch of these were back at cash value, I thought, well, let's take a look at them, because a lot of times when something heads back to cash value that had a ridiculous run up the way this stuff did in 2020 and 2021, that is right around where institutions start getting interested in the stock again. But I have to tell you that looking at these, it just doesn't look that way. It really, really doesn't. TWST and VERV. Okay, well, obviously that looks interesting. Let's zoom out and take a look. Maybe there's more to this one, everyone. Maybe there's actually something to this particular position. This is a lot of volume, especially compared to what happened previously. This is the first time we have seen that. Let's zoom in. So that's a positive sign. Let's see. What's the lows down here? 1350. Oh gosh, yeah, but it's see, this throws the chart off. You almost have to go like this. You almost have to go like that to get an accurate view of it. And now it doesn't look so pretty, does it? Now it doesn't look so substantial. Let's zoom in here a little bit. What do we see? You got a lot of volume coming in at highs, everybody. You're going to return. This is going to return back down here into this 40 range. Yeah, this will come back down into your 40 range. That's a daily chart, though. Gosh, there's just, there's not enough volume on this for me to even. No, we're out of here. There's just not enough volume. Although, I mean, this is a pretty easy play, to be fair. There's not a lot of volume at this high, which I would like to see. So I'm going to leave that alone. Yeah. VERV, let's see, guys. Man, look, sometimes when you go through these, it's just a matter of finding one that's really good. I mean, ultimately, that's what you're looking for. There's so many passes on a position, so many times that you just ignore it. There's nothing to look at. Is this high volume? 27 million. It's trading at 684. Sadly, this was at $20. And what's the low here? 920. This is more high volume. Let's zoom in on a daily. Let's see what it looks like. Possible. How's this thing treating gaps? It's filling them. On a daily chart, what do we got? We got up here to 1250. That's a 100% move, everyone. Lot of buying down here. at 833. A lot of buying here at 833. This might be interesting. Let's see. There's just no volume. Oh, it's funny. Okay, look, I'm not trying to be boring here. Um, there's just not a lot. Yeah, there's not a lot to say. Prime PRME and edit, PRME and edit, PRME. Okay, well, this is obviously going to be nothing. You can't call anything with a stock like that. Edit. Oh, we might be dead in the water here, everybody. I might add a subject matter to I might have to add a new subject to this live, because this one is not going well. Let's do a proper walkthrough though of a position, so that we're learning while we're here, right? CRBU and sauna. All right, CRBU. Let's put it in CRBU. And in fact, I think what we're going to do is we're going to do a NASDAQ breakdown. Yeah, and sauna. We're out of here, guys. We're done looking at these. They are all the same, and they are not worth looking at. That's just the way that goes. So let's do an actual breakdown of the NASDAQ right now. Okay, let's do it from a long-term perspective. All right, everybody. Let me see how long we've been live here. This might be a short live as well, which is fine. I always do longer lives. It's only been 12 minutes. Let's do a breakdown of the NASDAQ. So what we want to know is, how has this week been? How has the month been? Is this something that we need to be afraid of? Is this move something to be fearful of? Well, what we first do is we take a look at the volume of the past. This is a giant economic disaster that occurred. And what happened was volume doubled and tripled from the previous years up into this move. And if I pull up the S&P, which was the leading index in the 2008-2009 financial crisis, you will see that it looks much worse than the NASDAQ. But for now, do we see anything like that where we sit? No, we don't. So we know we're not in any sort of economic situation. We're not in anything global, right? So let's go ahead and zoom into a weekly chart. So we zoom into a weekly chart. What do we see? We see 2020 back here with high volume, and then price takes off. We see a dip here in 21 through 22, lots and lots of volume, and then price takes off. So we broke to new highs. Did we revisit those highs? Yes, we did. Now, we've recently broke to new highs, and we have not revisited those highs, which are about 450 on the QQQ. So right now, what you could say is what we're missing in a long-term perspective is revisiting these highs, because as you'll see when you break out to a new high, this is your high. This is not a high. This is your high back here, okay? This 2020, 2021, this is your high. So when you break out of that through here, you have to revisit it. And you do. Right there. Okay? So now we've broke out. It's been revisited. Now we've broke out to a new high. Have we revisited 450, which is 30 points below us? I don't know, 8%, 7%, something like that. No, we have not. So right now on a weekly chart, we can say, okay, for markets to move efficiently, we should see a 7% pullback or so on a weekly chart. If you know how to study charts, you know that can take up to 3 years. If you know more about charts, you realize that at the speed we move now, that is not reality. So here's that previous high we were talking about, and here's that 450 mark that we were discussing. Do we see anything right now? So let's go ahead and throw up a line. Here we go. Now we can see where it's at. So is there anything that we see going on now at these high prices, this new high, that would indicate that we are going to have a move down to this 450 level? In fact, I would say there is. I would say that right here, we are now on a daily chart, okay? So we have 1, 2, 3 standout bars since May. This is May back here, okay? This is where price pulled back. This was buying the dip, obviously, because prices took off. But then prices really slumped, all right? We got a pull back here. And what do we get? We got a big bar. This is on May 31st. Since then, we have nothing that even compares to yesterday, the day before, and 3 days before that. So I would say that yes, we do see an indication of selling at a high price, right? This is your high price, okay? And these, whoop, 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 whoop. And 1, 2, 3 high volume bars exist within that little area at this price right here. So could that potentially be selling to bring you back down and kind of retest this previous resistance level, which is what is now a support level? Has that occurred? Is it possible that that's what we're looking at? Most definitely. This is on a daily chart. On a daily chart, we're in summertime, so it's a little slow, but daily charts typically are 12 to 18 months. Sometimes they can go up to 24 months. Just depends. So what we want to do is we want to zoom in a little bit. All right. Do we have this was the volume we were just looking at, okay? This is a 4-hour chart. Does this volume look like it stands out? Does this stand out? Is this a lot more than the previous few months we've had? And this is in the middle of summer, okay? This is July. This is the slowest trading month of the year. And look at all this volume as compared to all the way back in May, all right? All the way back to, frankly, the beginning of May, so spring. Yes, this does stand out. Remember, you're looking at notional, guys. You're just looking at notional volume. Is the volume higher, lower, the same, right? Is there any meaning to be found? I would say that where I just drew that red line right here, let's make it blue so it stands out a bit. There you go. Where I just drew that was probably the average volume since May 2nd. And look at the volume here. This is in the last couple of weeks. All right. So on a 4-hour chart, as we zoom in, yes, once again, it looks like there is some substantial volume that could come into play here. How's it look when we zoom into 1 hour? Well, okay, so there's a giant piece of volume on the 1 hour in that initial price drop after that gap down. Now, what has happened to price since then? So since we hit whatever this is, 487, what have we done? We have dropped 8 points. We've dropped 1.5% since then. Now, this gap has just occurred, and after the gap, there's a large piece of volume telling us that most likely this gap should fill. But we know on the 4-hour chart, which should be over the next month or two, right? That's about the time frame for a 4-hour chart, that we should revisit 450, or it looks as though the possibility exists. So what we can say to ourselves now is, okay, so what we see here on a 1-hour chart is that over the next month or so, this gap will fill. For now, guys, remember, every chart is a new opinion. And right now, the opinion would be, okay, so over the next month, this should fill. But we know over the next couple months, we should return back down to that 450 level to at least test. So we're going to zoom in a little bit to a 30-minute. What does a 30-minute tell us? Does it tell a different story? Well, a little bit of a different story, because up high here, what you see around 492 is high volume. What you see here around 498, 499 is high volume. And then you see that once again on that price drop. And now you're seeing it more so and more so. And as price pulls down, it looks like we're losing volume, right? So here's that initial gap. Here, let me show you. Here's the initial gap as far as volume goes. So institutional footprints. Here's the initial gap. Price is falling. That means that there's not as much supply to be purchased, right, to fill this gap. You're going to need energy to fill that gap, folks. It's not just going to happen on its own. You're going to need the energy. You're going to need the supply. And it looks like there's not much supply there, meaning stock. So as supply dries up, that's when you'll look for the bottom to pop. This is not, we've already looked at the weekly chart and the monthly chart. This isn't a matter of looking for capitulation. This is a matter of business as usual in the stock market. And what we want to know is what's going to happen over the next month, week, and day, right? So has anything changed on this chart? I would say no. Okay, anything here? Well, we have high volume here. Look at this. See this little gap? Boop. And look at this. Bang. Has price really moved since then? I mean, not really. 483 to 479, right? Less than 1%. Do we have some volume down here at the lows? Yes. So I would say what we're looking for is this gap to fill, and then we are looking for prices. Once this gap fills, I would say we'd probably be looking for prices to return down to about 450 on the NASDAQ. QQQ, 450 on the QQQs. Reason for that is very simple. We need to go back down and test what was previously resistance, because that will now become support. That maintains a healthy market. If we get a nice bounce off that, if we see volume come in, you have to reevaluate once you get there. And also, once we fill this gap, you have to reevaluate. You have to reevaluate once this gap fills. But for now, we can say, okay, this should be what happens. So we now know what the potential for our upside is. We also know what the potential for our downside is. So if you are someone that is investing and you're saying to yourself, well, I'm a long-term guy, I just like to miss the big bear markets. Are you doing anything right now? Absolutely not. I mean, why would you? The monthly and weekly chart are beautiful. They're in perfect shape. In fact, so is the daily chart. The daily chart is fine. It just tells you that right now we should be heading into a correctionary phase of 7 to 8%. So if you're someone that says, hey, look, 7 to 8%, I like to make money in drops like that. Well, okay. Well, here's your opportunity. You can get in there. You can either short futures. You can buy some puts, right? And I would wait for the gap to fill, but you could buy puts, you could buy futures, and that's intermediate term. And that's somebody who's working off a daily chart. So you're looking at 12 to 18 months. You're saying, hey, 7 or 8% drops in my portfolio are no good. All right, so you have an action plan. If you are someone that says, look, I'm an intermediate term trader, right? 50% of my portfolio is long term, and I'm going to do, that daily chart scenario sounds good to me. But the other part of my portfolio is intermediate and short term. I'm going to play this close to the vest. Well, then you have a lot more opportunity, and you have an ability to zoom in, because what you know is that gap should fill in the next 3 trading days or so. Then you know that the path down to 450 looks like it should be imminent. So you're going to have an ability. Once this market pops and fills that gaps, guess what's going to get cheap again? Puts are going to get cheap again, right? Before this last move of a 3% down, and you can watch my lives from last week, I was explaining that the put volume was non-existent. It was the lowest levels since before the crash in 2007, 2008, 2009. So previous to that, I call that whole era a market crash. So previous to all that, that was where put levels have been recently. That means that when the market pulls down, it's going to pull down hard. Okay, so you now have a strategy moving in. Now, this is a very broad strategy that I just gave you because I don't know you, all right? But what I do is I do teach one-on-ones with folks, as I was talking about in the opening of this video. And I get a lot more specific with individual students because some care about the biotech industry, right? I just looked at biotech companies today that were trading somewhere near their actual cash value, because to me, that's wild. But then after looking at those companies, it's maybe not as wild. And there's certainly no footprints on those charts that would make me very interested in those positions. However, they were worth taking a look at. But when we broke down the NASDAQ just now, you just got an idea of what happens as you break down an index. Now, how did I even get to the NASDAQ? Well, how you get to the NASDAQ is first you start with the world market. Then you start with individual countries. Then once you find the strongest country, you find the strongest index. Once you find the strongest index, you find the strongest industry. The strongest industry will then have the strongest stocks. You find the strongest stocks, and those are going to be your biggest movers and your biggest players that institutions are involved in. Those are the markets you want to be in. You want to be in the markets where institutions and market makers they're playing. They're making moves, because that's how you identify institutional footprints. If you're out there playing in penny stocks and low volume stocks, there's no proper way to evaluate those things because they're so easily manipulated. You need to stay in the areas that institutions are involved in. All right. I hope that was educational for you there at the back end on the NASDAQ. I apologize for a lot of these biotech stuff, but there's just nothing there. It doesn't mean it's good or bad. There's nothing there. And the volume is so low that I wouldn't encourage anyone to do anything. once again, if you are interested in learning this stuff and learning how I do this, let me put it back up. Here is my Twitter handle. Here is my LinkedIn. And there is my email. Please reach out to me, dmiller@prometheaninvesting.com. 5 new students by next Friday, no more, no less. Friday's the cutoff. If I have 1 student or no students, or if I have 10 people reach out, the first 5 will take the spots. I will tell you that I don't have a problem taking on new students. The 5 spots will fill up. If you are interested, reach out. If you would like to know how to do this, if you look through my Twitter and you realize that my accuracy levels seem a bit ridiculous, well, how do you do that? Well, I'm putting up charts, and I'm doing it live, and I'm labeling the levels I see, the prices I see, and you'll see those targets are hit very, very consistently. There's a way that I do that. There's a reason that I've learned to do that. It's taken me 25 years. All right. If you think that you have an automated trading system that can go head to head with me, bring it on. I will beat machine trading all day, every day. It has actually made my life much easier. I know how to deal with individual traders as well, because they can't hide those institutional footprints. But this machine trading and this AI trading, nothing has ever been easier to trade against. So if you are a younger person, or if you have an IRA that you've been contributing to, and you have the ability to trade that single-handedly, there has never been a better time to do this and learn this. I teach it to you, but remember, you're doing one-on-one sessions with me at least once a week, typically twice a week. But even if you're only doing 1 time a week, we have the ability to go through your positions together and evaluate them together, which gives you my 25 years of experience to guide you down that path, right? So thank you so much for joining in. Remember, if you're not good here, you're not good anywhere, all right? Get out in the sun, go for a walk, pick your head up. You haven't failed yet. How do I know that? Because you're watching this. That's how I know you haven't failed yet. All right, everybody. Remember, every day above ground is a good day, and I will see you tomorrow.